Welcome investor looks another ETF spotlight review. Today we're taking a look at ACDC, Let There Be Rock. This is a global X battery tech and lithium ETF. So with this one, you'll be getting exposure to the full lithium cycle from mining to refining the metals to the battery production, and also if you stick around, there's a few car companies being added to this, so it might be worth your while to take a look at it. I think, you know, a mega trend. I think this type of trend is going to be around electrification, you know, changing over of all the grid for the next, 30-40 years. I think it's going to take quite a long time. So I think if you're in an ETF like this, it might not be a bad place to invest some of your money. So hang around and check it out. Hey there, investor holics, it's Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content. You can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your financial life, expand your investment horizon, and crack your financial sky. Don't be afraid to give us a thumbs up and a subscribe. Okay, so the Global X Battery Tech and Lithium ETF seeks to provide investors investment results that correspond with the price and yield performance before the fees and blah 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 of the Solactive Battery Value-Chain Index. So the Solactive Battery Value-Chain Index tracks performance of the companies that are providers of electrochemical storage technology and mining companies that produce metals primarily used to manufacture lithium batteries. The index universe for energy storage technology comprises, I should say, projects identified for the Clean Horizons energy storage source, classified as electrochemical, having an energy capacity of at least 1 million watts per hour, and categorized as energy storage technology manufacturer. So I think that might be where the car companies come in. As always, we need a Y factor. Huge growth potential. Lithium battery technology is essential to the rise of electric vehicles, renewable energy storage and mobile devices, advancing clean technologies. EVs provide zero direct emissions, meaning broader adoption could result in reduction of greenhouse gas emissions, I should say, and improve urban air quality. Unconstrained approach. So ACDC invests in companies throughout the lithium cycle, including mining, refining, battery production, cutting across traditional sectors and geopolitical or geographic, pretty much globally. So there's no geographical definition of where the ETF buys or invests in which companies in which country type thing, if that makes sense. Okay, we had a net asset value of close the other day when I did the research of 84.80, trading just above that at 85.65. So you want to be just double checking that if you actually want to buy this ETF when it's trading above the net asset value. That's something to keep in mind when you're purchasing ETFs. There's a difference between the share price and the net asset value price. Market cap just over $500 million. Management cost of 0.69%. There's a small distribution, about 0.7%, I think, from memory. So if you're interested in gaining exposure to this booming side of the market, then this one could be for you. I like this one anyway. I think it's something that you're going to see some reasonable returns for over the next 5 to 10 years, maybe even longer. I think it's one of the hottest areas in the market this year, and potentially, like I say, going forward as well. I think the market's had some wobbles. You know, then there's been quite a few companies that have had some really, really good returns. So, yeah, I think, you know, ACDC aims to provide investors with a return that before fees and taxes, you know, I think it above the index. But I mean, yeah, I think you're going to perform the index, I think, outperform the index anyway, I think. So, you know, battery technology is central to the growth of renewable energy and electric vehicle usage. Wind and solar energy are forecast to supply 48% of the world's electricity needs by 2050. Over half of all new passenger vehicles sold by 2040 will be electric vehicles. To supply this growth, the battery market is anticipated to reach US $90 billion by 2055. And the battery storage will need to be expanded by 300 times on existing capacity to meet the requirements for 2050, and that's excluding electric vehicles. So I think there's quite a lot of growth to go, and you know, if you're investing in this one, you could quite possibly capture that upside. Okay, so looking at the performance table here, since inception, you're looking at total return of almost 17.5%. If you've been in it for the last 3 years, you've done pretty well, 26, just over 26%. Looking at the graph, it's definitely flattened off now, and I mean that kind of astronomical growth from sort of late 2019 to now, I think it's flattened off. So I think that the growth is going to be a bit more modest, maybe sort of tracking, sort of looking at the 3-month returns that might be tracking at that type of level for the from here into the future. So that those big gains, I think, are probably going to be a bit more tempered. So you're looking at investments in Pilbara Minerals, Renault, Mineral Resources, Alkane, LG Energy Solutions, Delta Electric, Livent, TDK. TDK used to do the cassette tapes, didn't they? Now they're in the chemicals biz. So there's a couple others there that I don't really know about, but you know, I think as a top 10, I think you know, it sort of gives you a good grab bag of some of the bigger lithium producers, and some of the ones that are sort of in production, got good contracts and that type of stuff. So I don't think you can really go wrong with the investment in Pilbara Minerals. Mineral Resources is a good company. Alkane, I think, is going to be perform pretty well after the merger. And Livent, I think they're a pretty big company anyway. You know, all these car companies are going to have to electrify and move forward. So this is definitely one I'm going to do some more work on. I wish I kind of done a bit more work on it 2 or 3 years ago, but you know, hindsight's a beautiful thing. But I think there's definitely going to be some more upside in it. You know, if you hold this as a, you know, as a small part of your portfolio, 5 or 10% of your portfolio, I think you over the long term, you know, next 5-10 years, even greater horizon for this one, I think you know, the potential to do pretty well in it. So one to take a deeper look at, you know, my feeling is anyway. So hopefully that was all interesting, informative. Don't be scared to like the video. That kind of thing always helps the channel, and also subscribe if you got a couple extra seconds to smash the subscribe button as well. That'd be greatly appreciated. Thank you. Hopefully it was enjoyable. Ciao. Hey there, are you interested in learning more about personal finance and investing in the markets? If you are, smash the like and subscribe buttons down the bottom of the screen there. Crack the Sky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your financial horizon
and crack your financial sky. Hey guys, I hope you enjoyed the video. Please give me a like and subscribe. Greatly appreciated. Thank you.